So for me, my whole trading plan, it is designed to give me opportunities, to win, to make money. To me, the goal of trading, it is to put myself in a high probability of profits. So when there is a low probability or 50-50, I don't feel confident. The 50-50 is not confident for me, right? If I got on a bike, my motorcycle, and I took a ride every day and I only felt 50-50, I was gonna make it back home. I only want to get on that bike when I feel like it's a pretty high chance. I feel rested, I feel good. There's about a 90% chance from me of what I'm gonna do is gonna get me back home safe. Now, the rest of the drivers, I can't really determine. Traders and motorcycle riders are the same. Most new traders and most new motorcycle riders die in the first 12 months, right? If you ride motorcycles, you're more likely to have a fatality in the first 12 months. If you're a trader, the first 90 days, you're going to blow a lot of money. You're going to lose the most in the first 90 days because you don't know what you don't know. So one of the most important aspects of trading is being able to stay in the game, to make it past 12 months, right? Riding a motorcycle, if I make it past 12 months, I'm more likely to live and ride a little bit longer, right? I was told that the only type of motorcycle riders are ones that's been down or ones that's going down. Type of traders, ones that's going to be profitable and ones that's not going to be profitable. So I try to do everything possible to, minimize the risk. And charts like these, I tell you guys when we have shit coins. Now, more experienced traders, they need volatility. They need up and down to make money. Like right now, the market isn't really moving. It's kind of sideways. I don't want to spend hours trying to figure out what the market is going to do for a small amount of money. So the volatility for a more experienced trader, is good. People make a lot of money during the FOMC. For inexperienced traders or guys that, had to trade like their life depended on it, they're not going to risk trading the FOMC, because how often do we see charts like this? When this chart comes up, just let's look at this on a 1 hour chart. How often do we see this type of movement in the market? Right, this market right here, do we see that often?
No.
Right. How many times a month do you see this on the S&P?
None really.
I mean, you may see it one time, black swan events. You don't see it often. So, for people to say they know how to trade it, right, with no risk. I mean, like, your risk is going to be the same. We have opportunity to make money, lose money, every day. But I like to trade things that are more, it gives me better odds. So I'm just telling you that from my point of view, because when people were sending me messages asking me, what is the market going to do? Is it up or down? During these times, you got to trade in the moment, right? You have to make the trading decisions right at that time. And so I put up a trading plan. I don't know why a lot of you guys are trading, but part of the trading plan is, why am I trading, right? I'm trading, for me personally, at this point, I'm trading just to have more freedom, to own my time, not to have a 9 to 5, not to go into an office. I'm trading so I have more time for my health, more time for my family. And, if you're only trading for money, well, a lot of it's not trading to lose, right? Not trading to lose is still a good thing, but the freedom is that I don't have to trade 7 days a week. Traders do not get in the market to trade 7 days a week. So that was part of my decision of, hey, I'm not going to trade until after the FOMC, right? And then after, if you've seen, after the announcement, right? Let's see, you had the whipsaw up, then down, then went back up. During this time, the market was more calmer and the trend just went down. To me, this was a lot safer trade here on a short than this was going up, down, up. At this point when the meeting was over, this was a safer short, right? So I didn't have to trade the first part of it. I could trade after. And that's one of the reasons in the Mastermind report, a lot of times is after the Fed meeting, after 10 a.m., after a certain time, you have a clearer picture. And it's especially good for humans because it's hard for a human to trade that unless you just want the meat of it, because you don't really know where the top is going to be. You can estimate the bottom. A lot of times, I've got burnt trying to forecast the market when it's such a wild move. So for me, just to reiterate, this trading days of the week to trade crypto, right? Normally on Wednesdays, whether it's FOMC or not, you can be a bull or you can be a short, but you want to use stops, right? And if you're in a trade and you're in profit, it is always good to put a stop in before that happens, like before the whipsaw happens, so you at least know where you're getting stopped out. Also during these days, the platforms, whatever platforms you're on during high volatility, like today, was anybody on the platform that couldn't make a trade or jammed up during this time if you were trading?
Not that I noticed. Nope.
All right. So there was platforms, and luckily you guys weren't on any of them that jammed up and people orders weren't getting fulfilled, because when the volatility, this is not normal. So a lot of these platforms don't get tested until this happens. So if there's a high chance of volatility, if you worked at a hedge fund, you worked at a fund, a lot of them won't trade the volatility like this. They'll tell their traders, especially at prop firms where people are trading other money, they'll tell them just, hey, get out the market before it happens. They have rules that they'll wait till after 10 minutes before they get out, 10 minutes after. That's when you'll start seeing positioning before this move happening. Guys are getting in and out, they're positioning in and out.